This video is titled The Day I Lost Trust in Banking, and it's about a personal experience I had with my own bank in the time before the financial crisis of 2008. Something to note is that before the financial crisis in 2008, people didn't really switch banks. Not in my country, in Denmark anyway. You were often a customer in the same bank that your parents were customers in, which meant that you inherited the bank that your family was a customer in, and you didn't ask questions, and you trusted and respected the bank. But that all ended for me during the financial crisis of 2008. Another thing to note, which I think is characteristic for the banking sector, is that before the housing bubble, before the crisis in 2008, banks were more conservative. Something happened during that time up until the crisis hit, where banks became more aggressive in trying to earn money and trying to get you to sign onto their products. And this personal experience that I had with my bank can, in my opinion, be assigned to this new development in the banking sector at that time. Anyway, my personal experience took place during a meeting with my contact person at the bank. Um, the bank wants to call their employees advisors. Uh, Today, I will never call an employee in a bank an advisor. At best, I will call them. I will call that person a promoter or a salesperson because that's what they are. They're not an advisor because you have to follow the money and see who's paying these people. And these people's paycheck come from the bank, and so that is where the loyalty is going to. It's not you as a customer. That would at best be a second priority. The employees at the bank are, like every employee, loyal to where the paycheck comes from. And so I will never see an employee working at a bank as an advisor or a representative of the customer. So I was at this meeting with this contact person at the bank, and it was supposed to be just a casual walkthrough of ways I could allocate my resources regarding saving for retirement. So the promoter had printed out a prospect with graphs showing different investments, suggestions that I could make. We went over those during the meeting. But I wasn't really convinced about the prospect. It seemed too generic. It didn't contain much analysis, and it didn't seem very thought through, containing or regarding my personal profile. It seemed, again, too generic, and it looked to be like a kind of template that you could just print out for a customer. Nonetheless, I'll let her talk until she had finished her presentation. Another thing that bothered me was the title on the front page of the prospect. The title read Investment Agreement, and I was under the impression that we were just going to have an informal conversation about my opportunities for saving for retirement. And the title was a bit too formal for that. Nonetheless, during the meeting, we had a discussion back and forth, and eventually I just told her that I wasn't interested, and that ended the conversation, in my opinion. But then something happened that surprised me and even startled me. So behind her desk, this promoter turned to the last page of the prospect, which contained a line, and above that line was my name, and next to it was another line with the promoter's name above it. And then she said, "Well, then you just have to sign here." I stopped and I looked at the paper and I asked her why I had to sign. And she said, "Well, it's just to confirm that we've had this conversation." Now, considering that the front page of the prospect read investment agreement, I told her, I don't want to do that. And she replied, a bit flustered this time, well, you have to. And at this point, I made it clear to her that the meeting was over, and I got up, I put on my jacket, and I left the building. I was mad and I was confused at the same time as to what had just happened, because I wasn't used to this kind of behavior from a person working in a bank. Thinking back of this experience, I believe that it plays into a larger mind shift in society that accelerated during the years before the financial crisis, where banks became increasingly greedy and aggressive in making money, and the long term mindset disappeared in favor of the short term mindset. And it also it made our society into a society where everything is now capitalized. Our social relations are capitalized, our personal information has been capitalized, and everything has been leveraged uh, to a point where it can't really go any further. In relation to this, I think that the promoter at the bank at that time had simply been financially incentivized by management to make these kinds of agreements with customers, and in return, she would receive a commission. And so I think that the promoter was simply just fixed on the outcome of the meeting in the form of a handsome bonus, and then customer care and professionalism be damned. It may not be the correct explanation, but it's the only explanation I can really come up with to explain the kind of reckless behavior I witnessed from this woman that day in that bank, and which paved the way for the greed and the short-sightedness which created the financial crisis in 2008 to begin with. It's the same shift in mindset and behavior which today have left me void of any loyalty or respect towards banks in general, and which has made me a firm believer that the people as citizens and customers should have the option of having a bank account at their central bank as an alternative uh, to greed and exploiting banks. This was my personal story. If you have a story of your own, you can post it in the comment section below, and know that you're not alone. I hope to reach you with my next video, and until then, I hope that you continue to educate yourself in finance and economics to maybe one day reach your financial independence. But until then, have a good day.